Hey everyone, this is Kirk here again at OptionAlpha.com, and welcome back to the video recap here for the trades that we had today, the 14th of January. Again, a lot of closing trades as we get close to expiration. That's kind of what you'll see here at OptionAlpha.com as we get close to expiration, as we'll start taking some trades off, taking profits, taking losses, etc., and moving forward to next month, which is exactly what we did here with a new opening trade for March. So as you start to get a feel for the trading alerts here at OptionAlpha.com, you'll start to see that we start to roll positions, January, February contracts over to the next month, March, right now, pretty early in the cycle. So I think the March contracts, definitely 50 days or so, maybe even 60 days. I'm not sure exactly. So the closing trades we'll go over here in a minute. I want to go over the one opening trade that we have on TBT because bonds have been very active recently. And so we actually bought a vertical call spread on TBT today, and I'm going to go over that in the chart and in the pricing tab. But we bought 3 of the TBT March 2014. That's the designation here, the contract month, March 2014. And they were the 74-76 calls. So we bought the 74 strike, sold the 76 to help finance the purchase of the 74s. And together we paid a debit of 88 cents overall. So again, what we usually like to do with all of our vertical put spreads, either call spreads or put or call spreads, is buy them for about the mid price of the strikes. So the mid price in this case, the difference between the strikes is $2, and so the mid price would be about $1. So we paid 88 cents, and that's a little bit less than what we usually like to pay. So we actually like to pay a little bit more for these. It doesn't mean it's a good deal because it's less. It's just usually what we pay for them is about $1. It seems to be fairly a good price. So let's go over and take a look at the charts of TBT. And you'll notice that, like I said, the bonds have been very, very active recently. So TBT has had a pretty big move lower over the last couple of days. And you can see it's running on a pretty consistent basis that it's been moving lower. So bonds have obviously been going the opposite direction. So we think that at least in the short term, and this is why we made just a pure directional trade here, is that from here up, we're giving ourselves plenty of time to be right in this all the way to March expiration. But we think at some point between now and March expiration that TBT is going to rally and bonds are going to kind of recover here a little bit. So that's the only reason that we're playing this right now, is because we're giving ourselves a 50-50 shot between now and March expiration that at some point TBT will trade up above where it's trading right now. And that's all we're looking for, is we're looking for it to trade up above where it is right now. It's purely a directional trade on the market, and it's a pure 50-50 bet. So I want to go to TBT so you guys understand this as well. As always, down the bottom left-hand corner, all of our trades are live. So this is a live trade. We're up 15 bucks on it from when we entered it here today. And you'll notice that we traded the March contracts 66 days to go, so it's a little bit further out. And you'll notice that with all of our vertical put spreads or call spreads that we're doing for a debit, that we actually traded this one strike in the money. So the first strike in the money was the 74s, and then one strike out of the money. So the strike that's out of the money that we sold are the 76s. And we did that because TBT is trading right around 75, at least when we entered this trade. So that was kind of the midpoint between 74 and 76. And so by widening out the strikes, we not only get a bigger range of profit, but we also save a little bit on commissions because we're doing this thing a little wider, but it also helps us narrow down that midpoint right at 75. So if we actually bought the 75s and sold the 76s, then we'd be putting our mid price and our break-even price around 75.5, which is higher than where it is right now. So by going down to the 74s and still keeping the 76 calls, that allowed us to bring our midpoint and break-even price back down closer to the actual market price of TBT right now. So hopefully that was good to go over that. I know that it was a long explanation for one single trade that we made here today, but I think it's warranted since we've gotten a lot of questions about that. All right, so let's go over some of the closing alerts that we had here today. I'll cover some of these quickly just because they're closing alerts. Sold the vertical put spread that we had in Baidu back to the market for 35 cents, 230 loss on this one. A little bit bigger of a loss than we took. It's a very big, wide spread, but again, as we get closer to expiration, Baidu's nowhere close to these strikes, so selling it back, getting some money that we can out of the strikes before expiration. FXY, we sold back to the market for a credit of 50 cents. Same thing, a 108 loss on this one, a little bit bigger because we had a very wide strike, 94 to 97 call spread. So again, taking some of the money off the table here, salvaging some of this. Actually, this is probably a really good salvage trade because FXY is nowhere close to these strikes. So at least right now, with our midpoint and break-even price, there's probably no chance that it's going to get there. So at this point, we're going to take the trade off, salvage that $50 credit for the 4 verticals that we currently have. Sold an AXP credit put spread that we had on that was just traded just a couple days ago. So this trade is only a couple days old. I do want to go over this chart so you guys understand why we got out of this trade early, since it is a February contract, unlike the rest of them that we got out of today, which are just January. But we had bought this 95.85 put spread and had wanted AXP to go down. And so we made a nice $205 profit on it, took it off today at a 730 credit. And really the whole idea with this is that, again, like the TBT trade that we have today, where we just are making a directional bet on the market, AXP or American Express did exactly what we thought it would do. We kind of entered this trade up here near the top, and that was just really good timing. It's just kind of dumb luck that we had really good timing on the perfect direction in this trade. And since it moved down, that's exactly what we wanted to do. All we were betting is that at some point between now and February expiration, AXP would trade below about 90. And since it did, and now it's trading all the way down to 87, we're not going to chance it and hope that it goes even further and just get greedy here. This is a 50-50 probability trade when we started, and so we made a nice profit on it. You got to manage this winner, take the money off the table, take the profits, and move on to the next trade. And that's how you get successful in this business, is by doing this consistently, taking 50-50 bet trades, and then when it shows a profit, then taking the trade off. And that's how you beat the odds consistently over time. Okay, so then the last trade that we had today is we took off the SLV, which is a silver, the 1921 call spread. We actually took off the other call spread that we had at a profit the other day this week, and then just taking this one off at a small loss. So it's about neutral on this whole SLV trade that we had. Silver's been all over the place all month long, so it's actually good just to kind of take one off at a profit, take the other one off at a loss, kind of get net neutral out of this position, possibly get back into something in silver for March or February contracts here in the next coming days, but we'll see about pricing. So again, sold back the call spread that we had on silver for $54 credit, ended up being a $49 loss per spread. So as always, hope you guys enjoy these videos. I know this one was a little bit quick tonight, going over some of the closing and adjusting trades. We'll keep having some of these as we get further into expiration here. Again, remember to make sure that you're checking all of your positions as we get close to expiration. Know when these positions go off and when is the last time that you can trade the contracts on them. Some of the positions that are out there, some of the futures and some of the ETFs, they have different expiration dates, so make sure that you're checking them as always. Enjoy the video and happy trading.